Hello traders, it's 8 a.m. Central Time. Thanks for joining me. It is Wednesday, the 9th of July, 2014. Derivatives trading involves substantial risk of loss, is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. As always, a quick rundown of what the overnight session has brought in. China's June CPI is lower year on year than expected at 2.3%. Expected at 2.4%, came in at 2.3%. Israel is considering a ground offensive into Gaza. They're claiming that they've been receiving rockets into Tel Aviv and so on. We'll see how that shakes out. Alcoa's Q2 earnings beat. Adjusted EPS is 18 cents versus 12 cents expected. It's quite a beat. Revised revenues of 5.4 billion versus 5.65 billion expected. Also better, reaffirms 2014 global aluminum demand. U.S. MBA mortgage applications week on week came in at 1.9% versus the prior negative 0.2%. It's a large swing. Looking ahead at today, what's on deck for today? At 9:30 Central, all-time Central, U.S. crude oil inventories are expected at negative 2.75 million barrels, distillates plus 1 million barrels, and then gasoline inventories at negative 450,000. At noon, we have a 10-year note auction worth for 21 billion. At 1 o'clock, we have the Fed minutes for the June 17th and 18th meeting. The market will be anticipating that and the comments in it. And then at 1:30 Central, ECB's Draghi is set to speak. I don't have the exact reason he's speaking. It says at IFRS Foundation in London. Let's look at ARTS. Pull that up here a second. What we're looking at here, I'm going to start with the yesterday's session. As always, we're going to answer the question of what have we done, what did we try to do, how good of a job did we do in getting there, and that's what this chart is showing us here. Yesterday we opened on the extreme of Monday's range. The market opened, pushed up, and reversed. Looked like an open test drive, but I didn't really see driving behavior. There were really good counter rotations. You could see here the first rotation down is 3.75 points, counter rotation 1.75, then 3 1/4, so slowing down a little bit. Pull back 2, so it looked like it was stabilizing, and then we have a 4-point counter rotation, 1.75 to 1.5 to 250, and so on and so forth. So the point I'm making is that an open test drive generally pushes deeper, would have pushed deeper to value or to the opening swing low or something, and then the drive would have been very, very obvious. The drive would have had bars that look a lot like this. Rather than a rotational. In either case, the difference between an open rejection reverse and an open test drive, the only real difference is the strength of the move. Why do we care what kind of an opening type there is? The only reason we care why there's to identify the opening type, because it helps us identify early on, as early as possible, helps us identify who is in control of the auction. So with an open rejection reverse, open test drive, when it's pushing up and then it gets rejected or tests and reverses or whatever, we know that we've got to stand in its way. We've got to stand out of its way on the long side in this situation. So in either case, whether you classify it as an OTD, ORR, or an ORR, it doesn't matter. In either case, it said, make sure your longs are light and tight or quick, because the market's rejecting the prior day's range and direction. Okay, so we have an open rejection reverse. The market drops. Let's see my opening swing values, because I'm at home. This chart did not update. We put in an opening swing at 63.25, test back into to 65, and then we did not see that opening swing again. And we definitely did not see yesterday's range again. So this basically put into play all of the targets below. The targets below initially was 55 and a half, 55 and a quarter, which is where we went to. 55 and a quarter right here. Why 55 and a quarter? It is the key composite LVN around this high volume node. So this is the next key LVN in the area. It stopped there, reversed back, and then the next target is the gap, right? At 54.50, and then the target after that would have been 53, which is the high volume node left behind from last month, and 52 would be the extreme given the range, the day's range, unless something fundamental has changed. The expected range, and I think I put this on Twitter, that I'm expecting it to decelerate into 53 and possibly test 52, but I expect it to decelerate into 53, where there's this high volume node here that's been built over time. It comes from way back here. And so that's what the market basically responded to, 55.75 initially, pull back, then it finally pushes through, closes the gap, gets to 53 by a tick. If you recall, it's interesting, the market's pushing tests by a tick. Recall the day before, we had a target of 67.50, and it went to 67 and a quarter as the low a day. Here we have a target of 53, and it went to 52.75. So it's kind of it's a generous way to fill that target. And then the S&P turns over and retests the mid. Falls back through. The expectation was for it to basically chop around into the close here, and it ended up finding buyers into the close. So if we look at that on a chart, we'll see that after it tested the mid, it came back down to that 55.75, which you put in back here. You see that 55.75 against the 55.50 or 55 quarter CLVN, and then it pulled back to it. Chop, 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 and I expect it to chop, chop, chop into the close. And then there was some covering that looks like some short covering by short-term players into the close. Pretty good delta on that short-term covering, from a delta of negative 27,000 to closing at negative 8,000. So that's a pretty good recovery. 19,000 contracts more lifted the offer than hitting the bid on the close. So that's how we auctioned yesterday. That's what we did. The market did seek lower prices. That's what it was trying to do. It was seeking lower prices. A clear rejection early on. I mean, this is so important to see and to recognize that the market, despite the fact that it built a lot of volume here, it could have tested value low, which was what was expected, 68.50, possibly 69.75. It didn't do anything like that. It immediately rejected the prior day's range, and that's just a big, big piece of the puzzle. That's something you have to look out for on the open. How's it treating the most recent auction? Remember, when this was trading, the stocks, the underlying stocks in the S&P 500 were trading, and wherever we ended up, wherever the point of control ended up, that's what was considered value at that time. So when we come in, we want to compare what the current prices are. We're not just looking at bars, we're looking at prices. What prices today, what is the relative value today versus yesterday's accepted value, and that's what we're all about. So we're looking for, and so when we see this rejection and a push away from the most recent auction, then then that should immediately trigger the idea that, okay, if I'm going to get long, it doesn't mean that you shouldn't get long in that market, but if I'm going to get long, I'm taking significantly more risk, and therefore my duration on the trades and my targets need to be tighter for those longs, in my opinion. Okay, so that's yesterday's trading. We did leave on a pretty bullish note here. We had the pullback, higher low, and then the market started to move towards this last high. So we have what looks like a W formation. And so we're looking for a push higher in the overnight. We got that. So let's look overnight next. The overnight session, completely kind of zipper type of stuff, nothing going on into the evening. The Asian session, 61.25 was the high on this pullback. That's what was taken out to 62.25, and that was the high for the session until this morning, until basically the bond open in the U.S. or the Treasury open in the U.S. We pushed to 64, and we're holding 62.75. Completely balanced profile. But the thing that you should note is that the volume overnight. So this is the day session volume here. The yellow line is the 20-day median volume for that 15-minute block. This is a 15-minute chart. For each 15-minute block, we're looking 20 days back, the median of 20 days, and it's plotting that value. So, for example, at the close at 3 o'clock yesterday, Chicago time, the 20-day median volume for that 15-minute bar is 99,795. We traded 105. So that's how this chart looks. Of course, the volume drops off on the overnight session. But this morning, you could see that pretty much throughout the European Open, the volume today is more aggressive than the 20-day median. You can see the actual volume versus the yellow line, which is the 20-day median volume. The actual volume is consistently higher throughout the morning. Okay, and for that reason, we note that the overnight session has pretty good volume compared to the prior overnight sessions, 162,000 with 15 minutes to go. So what does that mean? That means we should be expecting pretty decent activity overnight. Overnight inventory is long. Expecting a rotation down on the open, probably a test of the overnight low at 59, and possibly a push to 58.25, which is the point of control left behind from yesterday. So that's what I'm looking for. If we don't get that, now I'm saying that that's what I'm looking for. It does not mean that that's what it has to do. This is just a plan, an idea, an expectation. If the market does not give us that, that's a big clue. If the market does not have responsive selling on the open towards 59 or 58.25, that's a show of strength. That gives us a piece of information very, very early on. Combine that with the type of opening that there is, it helps us decide which side is in control or has more bias, and it helps us formulate for whatever the next trade is. And then our job is as traders is simply to figure out what price can we get in at that would give us the advantage of getting our scale out or getting our first exit, more so than getting our stop. Okay, so that's the whole point of the Trader Bite, is to kind of lay out one scenario. There are many, many ways to look at the market, but I'm just laying out one scenario of what's expected. Here we are, small gap, 62.50. The high is 64 overnight. Yesterday's close at 60.50, which is the overnight overnight point of control. The expectation on the open is that it will be likely chop around and test back towards yesterday's close, and then we'd like to see it dig deeper and get into 58.25 for a better base for the longs, if the longs are going to dominate the session. Remember, the intermediate term, long-term trend is up, short-term trend is down. We have point of control moving down, very steadily here from 77.50 to 69.75 to yesterday at 58.25. We have lower highs, lower lows, and lower value. So value and price is confirming that short-term sellers are in control. Long-term, intermediate term, we still have strength on the buy side. You can see that on any long-term chart. On any long-term chart, that we continue to just push higher with some very, 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 very minor pullbacks. Just an amazing, it's like a 19-year record that we've gone so far without a pullback. So that's that. The secondary hypothesis is that it does try to pull back, but there is just nothing there. There are no sellers. It leans against 61.25 and value high at 61, right? Pulls back to 61. This is a fairly decent value area. Pulls back to 61, and then it pushes into yesterday's opening swing and starts making its way back up to the 60s, the high 60s, and then take another attempt at getting into Monday's range, which starts at 67.25. So that's the second hypothesis. If we don't find that, if the tertiary hypothesis would be to move lower, attempt higher, break lower below the point of control, and test the other side of value, pull back to the prior day's point of control, and then move out of the prior day's value. A move out of the prior day's value will start to target even deeper into the existing auction, targeting 1950 first, 48.75, and then we're back into that range that we thoroughly traded at 1948 down to 1937. I doubt that that'll be the way we play out today. We left the session yesterday fairly bullish. There was Alcoa's report was very strong. We're in the earnings season, and I expect that the market will find reasons to continue higher and tackle 69.75, 71, and then ultimately 75. We take out 75. This is a key. If you have not noted 75 down on your charts, you probably should. 75 is the key line it has to get above to make new highs. The 75 separates, clearly separated and was tested and confirmed on Monday. It's a line that buyers will need to take over in order to start pushing new highs and start heading towards our targets, which I went through on Monday. Next target up, we've hit our initial target basically within 2 ticks, 78.75, the high 78.25. The next target 79.75. Once we get out of this mess, then there's going to be a new measured move based on this pullback, wherever the pullback ends up being. But the next target up at the moment is 2000.5 and 2005. Okay. Additional headline risk is the same. It's the Middle East again. The Ukraine situation has subsided, so I don't see anything special. Remember, Draghi speaks later. Who knows what he'll say. The crude oil inventories are not expected to affect the trade that much. So I'd say that there is some additional there is some potential headline risk, but it's not as big as the Iraq situation was, or the Ukraine and Russia potentially going to war. I'll leave you with that. Again, make sure you're setting goals and measuring your performance against those goals throughout the week. We want to look at how we did by the end of the week. We're not looking at day by day by day, but make sure that you have goals, and those goals will temper your need to overtrade. They'll help you select better trades that meet your goals. Otherwise, you're just floating around along with no purpose, no goal, and it's unfortunate, but we see a lot of people who end up coming to stage 5 too late after they've depleted their funds and so on, looking for help, and it's harder to help those traders at that point. I'll leave you with that thought, and I'll catch you tomorrow. Good luck.